Hi, I'm Eric with the Hedge Invest Africa Opportunities Fund. I want to give you an update on April. The fund was up about 1.1%. We had good performance in the longs, which were up 2.5%, but unfortunately offset also by a rally in the shorts. On the long side, our best contributors were the bonds in Nigeria, Egypt, and Ghana. But our commodity positions in Africa oil, Kumba iron ore, and Impala platinum also did well. On the short side, our shorts in banks and retailers in South Africa rallied ahead of the general election on May 8th. There's a lot of optimism that the re-election of President Cyril Ramaphosa will help to keep reforms going on the South African economy. We're supportive of Cyril Ramaphosa and what he's trying to do, but I think the problems are very big and are going to take a long time to fix. And I don't see any short-term solution to the current earnings problems of these South African companies. During the month, we made a decision to reduce our equity net long exposure from 50% down to 20%. Primarily, we reduced long positions in miners and energy stocks. These stocks have done well year to date, and we bought them in December when valuations were low and sentiment was depressed. But they've done well, and there are some concerns about the fundamentals. For example, I'm surprised that copper prices are not higher year to date. Chinese stimulus has been strong, and meanwhile, major copper producers have had production problems in the first quarter. Together, I thought these would have tightened up the copper market a bit more, but they haven't, which is a bit of a warning sign. Similarly, in oil, OPEC is working hard to reduce US inventories, but it's not having the intended effect yet, which is kind of surprising and a bit of a cautionary sign on oil. So we've reduced both mining and oil stocks, and we're happy to buy them back later, but we just want to be careful. One part of the portfolio we are excited about are our African local currency bonds. These are some of the highest yielding bonds in the world, and the currencies have been stable. Primarily, we like Nigerian and Egyptian T-bills. These markets are quite liquid, and the primary players are Egyptian and Nigerian local banks. These banks buy and sell these bonds and hold them on their balance sheet as a core part of their portfolio. These markets are less influenced by the risk-on, risk-off trades of global ETFs. We don't have much of a position in African dollar bonds, but this market is growing. The market for African government dollar bonds was about $30 billion in 2014, and it's up to $100 billion now in 2019. So this market, however, is very much influenced by risk-on, risk-off, and ETF trades. And so if we do see some weakness, we'll probably increase our position there. So the fund's positioned quite defensively. We've had a good start to the year. Just a little bit of concern that if fundamentals are slow to recover, we could see a pullback in equity prices. And so we want to be in a good position to add on weakness if we see a big sell-off. So like we did in December. With that, thank you very much.